Hi, everyone. I think today's 25th May, so we'll have to also go through monthly chart to see how this week might end. I mean, the month end, and yeah, the next week it'll be June. So yeah, it makes sense. So we'll start with 4 hours, go higher all the way to 1 month, and then see how things look like as for BTC for sure. So 4 hour, right? So I think we can say that it followed this path. This high is almost at the level where we wanted, which is the higher consolidation zone. Now, remember, as we have this zone, that means this is a resistance zone. It is not going to happen that it touches and then just break above. It doesn't happen like that. This is a heavy resistance zone, and after a long time, like since April 8th, there was correction, consolidation, and now this is the first attempt. It looks zigzag on a lower time frame, but it's actually straight line from this low of 56K range all the way to up, right? So this is amazing. So last time we covered that this is the most important bounce, especially this candle, a 4 hour candle that we see, because this was like consolidation up, but not convincing enough. And then when we got this one, then we got confirmation that it doesn't want to go down. And if you look at it, if even this consolidation was near this yellow line, and sometime what happens, which I explained earlier, that a lot of stops would be here. Remember, because everybody knows that this is a low. This is a low. So you can imagine how much amount of stops, the liquidity, the pool, stops would be here. So what happens is this algos try to get that liquidity and then goes up. That's my observation. And that's why I often say that in crypto, especially when you see this kind of consolidation, you have to keep some buffer, some gap, because then there can be slippage, or algo might try to take all the liquidity and go up. And I think that's what happened. 4 hours, you can see this spike, even that right after it dropped, it didn't go down much, and then try to bounce, fail, but then immediately after that, in few hours, it went up. And this is the candle where it got confirmation. And then of course, after a certain height, it retraces back, but it didn't enter into this one. If this would have gone down, like come down to this level, then probably this would have created some downside pressure. But it stayed here, consolidated, and then shot up, right? And this particular move actually closed above this high, which was another confirmation after this one that it doesn't want to go down. And of course, after consolidation, another leg up, right? I had this 4 hours. So first leg, second leg, and third leg, so to speak. And all the way to the upper zone. Now, upper zone, as I said, it's not going to just break above like that. Okay. Now, I think what we have to do is we have to extend a little bit. Right. I mean, there's no fundamental change as far as structure is concerned. It's just adding more delay. Now, so this has happened. We can say it went all the way to this zone. Now, I think we can, I don't want to overcomplicate. We can just simply shift it on the right side. And this drop, of course, this drop was quick. This drop was really quick. But I think probably this is also news driven or some, because China was doing the drill around Taiwan. So probably that could be the reason. I don't know. When it dropped, this consolidation was very positive about this orange line. This drop, I believe it is because of that. Because when I searched up, I couldn't find anything that explains me why it dropped like this. Because this drop is not just in crypto, but in also in stock market. The US stock market, the same thing happened. And the same time the DXY went up, the dollar index. So I think it was a global phenomena. I don't think it was anything local, anything crypto specific. So this drop was not crypto driven. Definitely, it is more about macroeconomics, especially I think the China's drill, because this drill was not just drill within China mainland, but around Taiwan, and huge amount of military and all that. So I think this was something different, as if um, preparing for invasion, something like that. And we don't know yet. That thing is still going on, and we don't know how it will unfold. As I always say, that we analyze it, but we what we don't know, and we have to have a caveat and uh, exceptions, so to speak, where some unknowns are always there. When I say always there, means the unknowns could actually change the scenario, and we have to be open enough to change our stand. But our stand doesn't change based on event, but based on the impact of event on price with respect to the key level. Not just because there is a bad news, we react to it. But what does that bad news, like in terms of price action, what kind of impact it creates? Does it change the structure? Does it break key level? And so on. If that happens, then we have to act accordingly, because that's the whole purpose of doing the TA. So we definitely focus on events, but they are optional. Means we understand the event to because some events are one off. Okay. Even if the rumor is that, but some developments might not be one off. For example, war-like situation, um, it's not just one off. So if there is tension now, let's say that's a rumor, but it can reoccur, and the implication is could be widen and deeper and major. So of course, these are some factors like inflation, war, which impacts supply side, and that's why they are very important. And we have to keep our eyes open for those kind of adjustments. So anyways, seems like there is no war situation at this moment, so probably market realized and now bouncing. Now it is back to where it was, so we can say that this level is where it was consolidating, you see. So now the consolidation is happening around orange because of this drop. Otherwise it was right on top of it. So we can say that this drop we have recovered, and we are back to where we were earlier. Right now what we want is this has, so now it's very clear. I don't want to add so many drawings, to be honest, but we don't want this line to be broken, and sometimes it is better to draw a horizontal line like this. I'm not going to keep this line, I'm just going to keep it for explanation. So I would just say that it should not break, let's say 66K, 66,400 or 300, let's say. And then, but ultimately we would not like to see 64,500, right? So this pivot, I would say, is important. Okay, from structure point of view, of course, all these are important, but when you ask me what is the first sign, so the first sign is if it breaks below this consolidation, let's say this one, to be safer side. So if it starts going below 66K towards 65K, then it kind of raise eyebrows. And below 64K, I would say, is where we think, oh, this is concerning, because it doesn't make sense to go back to this zone, especially if it returns to this zone, because you know that I always cover bearish scenario along with a bullish, right? Just to understand if things change. So unless and until price returns back to this level, there is no threat to this recovery. In fact, instead of drawing this one, I could simply draw like this. I could draw like this. Yeah. So some people, so you see this, there is no right shoulder. I mean, this is left, this is head, but the right shoulder hasn't been formed. Right? That's what happens. So you cannot prematurely declare that this is head and shoulder and then there's a breakdown. That's not right. I explained many times that the pattern has to be complete for you to predict the next probable step. And sometimes even if the right shoulder is formed, actually you see surprises. Like not many times, but it's not that 100% time, or 99%, 90% time, head and shoulder breaks down. When you do statistical analysis of different patterns, even if you refer those who have done it, you would find that the probability of any pattern could reach up to 70%, in 70s, and not even above 80. Okay, that's how it is. Means there are always 2 out of 10 chances where the pattern doesn't realize, I mean, doesn't complete. So that's how it is. So it's very important that when someone recognize a pattern, should not think that now the follow-up will be as per that pattern, like whether it's bullish or bearish. It doesn't work. So the statistically they are in range of 50 to 80%, and 80% is a big deal, usually 70%, right? So that much help you can get, right? I think which is big deal. Anything above 50, 60% from, I would say any method that gives us clarity above 60, 70% is a big deal. And if anyone is able to consistently write eight out of 10 times, I would say, that is phenomenal, because that's something that is near certainty, if not absolute certainty or certainty. And that is, we should be happy about it. So anyway, so talking about patterns, this pattern is not even complete. So, and it's consolidating here. So this is positive, right? So next step, we would like to see uh, some like another leg up, some consolidation, and move into this zone. So right now it touched and reacted. I think what we'll see is, if this lows are not taken, then we'll see some consolidation on the upper side before it breaks out. And of course, even here also, there might be some kind of retracement, you know. Um, so maybe if I had to come close to the potential probable timeline, using this box range on the x-axis, the month end seems to be the time frame where we would see price somewhere here. That means first week of June, we should see new high, right? With a caveat, or with a condition that it must not lose this lows, because you know what happens is when it loses low, it adds delay. And I've been saying that when it makes new low or within the range, or loses this kind of low, for an example, let's say this is a progress, right? So down, right, up, down, but higher lows, up, higher lows. You see, this is, we call progress, correct? But when it breaks below, so this is okay, because this is still above this white line. But you see, this is the roadblock, or a delay, right? Or digression, you can say. So this is not kind of a breaking a deal or something like that. This is simply a digression. So this, we are expecting breakout from here. Because of this drop, everything gets delayed. And of course, if it makes another low, it is going to add further delay. And that's how it works. And when you see this kind of, that you can say, when it is here, it is more like we are back to this level. So we can say that mid-April to, this is like end of the May. So we have delay of 6 weeks approximately, if we consider the 1 week more in this one. So there is a delay of around 6 weeks for this breakout. you know, at least 1 month of delay, because this would also take a couple of weeks before it breaken out. So that's how. So any low like this, but these lows are not lows like all-time lows, or lows below critical level. It's not like that. So there are three types of lows. One is the low. There is a low in this pattern. This is a low with respect to this, but within the consolidation zone. So these kind of lows are, I would say, these are not hazardous, so to speak. These are like, this would just add delay. But when it breaks the critical support, those lows actually not just adds delay but damages, like real damage in terms of price. I mean, the of course investment and all. That is not good, right? And the third is, of course, very simple, that there is a downtrend already going on. So these first two I'm talking about when the lows are made as part of the uptrend. Okay. And the third category is the low when uh, during the downtrend it is making low after low, like another lower low, basically keep on going down, right? So in that case, those lows are those are regular lows, because you are in the downtrend. So another low is part of the downtrend, and so on. But as far as the categories is concerned, this is how I put it. So we are seeing this kind of a lows, especially on a lower time frame like 4 hours. This is another thing. If I zoom out and go weekly, you won't see this kind of lows, right? We see only in this kind of time frame. So that's another fact. But theoretically, I consider there are three types of lows. The lows within the range, means within the acceptable range, means with above the support level. Those lows are innocent, or they are like non-hazard. As I said, they are not going to hurt you, because they'll hurt only from timeline point of view, of course. So there is damage in terms of time, waste of time, but not in terms of uh, investment, because the trend is not broken. Of course, is if that continues and breaks the critical low, then it changes to second category. Then we end up losing, because then that's not good, right? So I think I think this is very important to understand that, um, as far as delays are concerned, and that's where the maturity comes. That when you see a dip, the first question one should ask, that is this dip falls under category one or two. If it is one, you have to be patient, and say, okay, now, it's just matter of time, unless it changes to category two. And so that's where the patience comes in play, in my opinion. Then that's where the maturity of individual is tested, because that's where people get nervous and make silly mistake, do in and out a lot, and lose money, in my opinion. Not just opinion, but experience also. But and that's what I've seen it. So it is very important that I'm trying to simplifying using TA, right? Because you can, I mean, sometimes I try to explain in a way which can actually fit, not just for Bitcoin, but any coin and any situation. It's more like formula, sort of, where I'm abstracting out, and simplifying, and coming up with a rule which will help you understand that, if fall like recent fall, like last month's fall, how do we tackle it, right? Of course, what you need to know is what makes the change from one to two category, right? That critical level only the TA would know. So that I would say that's where the TAs are needed, right? That's for sure. But here you can get it. Or if you have good indicator like M swing, then also you can do the same, right? So I think you see, every week there is nothing much, but there is always something I'm trying to find out and share with you. Otherwise, if you ask me, it is very hard to come up with new content because the price is range bound, right? So it's very hard. But as part of this explanation, what I do is whatever comes in mind spontaneously, I try to elaborate and explain. So essentially, I share my experience, all my mistakes. Okay, so another thing that you can observe is there is a symmetry which I think I posted yesterday. When you draw a vertical line, so when you say symmetry, don't expect that you're looking at the mirror and you're seeing yourself as like symmetrical thing, and the reflection in the object. It's not like that. So this is a mirror. This is left hand side. This is right hand side. Okay, so don't expect that it's going to be identical or exactly the mirror image, right? The symmetry is not like perfectly identical replica, but it's just a visual clue that what it might do. So if it like drop, some consolidation drop, then a mirror image consolidation drop, and then up, and like that. So you see on the left hand side a drop, rise and drop, rise, drop and rise. I hope it makes sense. So this is something additional for you guys. Okay. So I think 4 hours we have covered enough. I'll remove this one. Maybe I'll keep this one. Like I kept this one. This was important, the white line, right? Because it represented this one. Remember? Now this is representing this one. So look at what is happening. In fact, that we can actually cover this consolidation in two segments. I'm not trying to complicate things, but you can say this was the first attempt. Okay, means this is a regular move. Let's say regular move and regular retracement. This is very common. After this, you can say this is the first attempt, this segment, because think about it. It started going up from here, went up, right, and then came down, which is normal. So when this happens, you can assume that there's some consolidation coming up. When this happens, you can say, oh, this is, you know what, this is more like ascending triangle. With if you imagine this as an edge, this as an upper edge, and then this at angle, this is more like ascending triangle. Not a perfect one though, but I mean, just to let me draw, just to visualize it. See, something like that. It's not perfect, as I said, but right. So this white line help you understand the edge of this consolidation. This is upper edge, this is lower edge at angle. And then this is breakdown attempt. There's always an attempt touching the support, remember, or it tries to come closer. And then of course it went down. So this is second. So this area that I'm trying to encircle circle is the first area of consolidation. You can say this is second area. I'm just trying to break this whole entire pattern. See, the whole entire rectangle or this area is consolidation. What I'm trying to do is more digging for you, for those who are TA enthusiast, right? Otherwise, it's too much, if you ask me. But we can cover that just in case if you're interested. So this is second consolidation, right? So we are back here. That means we are back to this level, as I said, right? So this is how it is. Sometime, it can really go for the third time. I'm not saying it should, but let's say if this also break down like this, something like that, and then again do higher, third one, smaller one. I'm just saying, then we'll have to have another line and then breaking. So as long as it doesn't return to this zone, it's not a problem. As I mentioned earlier, if it comes down to this, that's a bad sign, right? Then there is a high probability of breakdown. But if it is playing around in this zone, means it wants something, we don't know what it wants. Okay. It wants some kind of certainty, and I'm sure it is about inflation, because for last 3 4 months the inflation has been sticky and little higher than December 2023. That's why we see this kind of wait and watch stand from BTC, in my opinion. So it's holding up because it knows that it's not a done deal, and it is not going up because it is not done deal from a proper positive outlook point of view. So it's like it's staying. So this is how I'm interpreting that inflation is sticky. So the price is also sticky. Makes sense. Means inflation is the rate is not above 4. So it was 9 in the US, then came down, right? In mid 3.5, 3.9 range. And it is staying in that range for last 3 4 months, 4 months, right? So that's what we are seeing here. That's why BTC is also, and of course because of ETF and all, there's some enthusiasm over here. But if you look at it, it started from March, it started reacting like that because first 2 months of inflation was little higher month over month, so it reacted. And since then, it is sticky. So that's why. And last one on 15th of May, when CPI came, it pushed up because it went inflation rate went down by fraction. So that's why. So this is totally related to inflation, everything. And I think that's why May month inflation is important. I think I mentioned the April May month inflation's data are extremely important. April one is encouraging, if not something to cheer about, but encouraging for sure, and that's why it shot up. A fundamental point of view. So earlier, whatever I explained is technical, and now I'm trying to cover whatever I know little bit. I don't claim to be master in this area, but whatever I could interpret that, and what I do is I try to interpret and correlate with technical move, because then the narration is not just around technical but mix of fundamental and technical. Then I think I would say then it's a complete analysis. So, and I see synergy, and actually they go hand in hand. Right. I always say the fundamentals drive the direction. Okay. And the technicals tell us what is the boundary. Means it offers us the key level. And the key levels are important. That if imagine a stair, and just imagine that you don't know which one is the last step of the stair. So that's how it is. So the technical analysis is the area where you're climbing stair or getting down, basically, but it tells you when I say you means price. So imagine stair and you and that relate that with the price which is going up and down on a stair. But what you don't know is how many steps are on that one, which one has a resistance roadblock, and not all the steps are equal in terms of height. So, and that is what technical analysis offers you. It tells you that this is the next resistance, this is potentially the high congestion area on the upside or downside. So you can watch your step accordingly, something like that. And that's how it is. and the fundamentals usually the drive. And because now ETF and all, the Bitcoin is likely to be driven by fundamentals, macro fundamentals like stock market are driven, in my opinion, unlike 2018 or 2017 and prior, where everything was very limited to smaller group, isolated from the mainstream. But now after CME in December 2018, December 2017, sorry, everything changed, and it's changed even further after ETF. So we can imagine that these moves are always going to be like, this is high, always being saying now, it's like Bitcoin is like high beta um, stock. Beta, you can find out in Investopedia what is beta, but it's a volatility related index. So I mean, fundamentals, this formula, but it tells you the sensitivity with respect to its index. So usually the beta is calculated for stock with respect to the S&P or some index for that country. Anyways, so yeah, the fundamentally I believe that, I think this is because of the 15th of May's CPI. That's what we seen, and we um that's why there's a good amount of enthusiasm now. Okay, so that's why this month's data, and the energy price has come down, which is going to help for the May month, in my opinion, right? Unless something different happens. So this is month end, and I see the oil has come down. The natural gas has gone up, but oil is major thing, I think. So it will help the supply side, I believe, energy price. Even though I always believe that the core inflation even is driven by the energy price. Even if if you exclude, you cannot exclude, it's like everywhere. Think about it. If you are considering housing in core inflation, okay, if you are excluding transportation or um, anything, food and all, but like construction, it's part of the core inflation. Now, how can you exclude oil price out of that equation? Is it possible? It's impossible, because construction is all about material and all, right? And the material requires transportation and supply side, as you know, and all, and that is always relevant to oil. So I don't think, no matter what you do, oil is the driver. Okay, it's very important driver. One of them. I'm not saying the driver, but one of the most important one. So the oil price is actually hasn't gone up this month, I would say. I would not say it has crashed. So that should help. Okay, so that's let's go higher. You know what? Let's hide all because we had too many drawings. So it is here, right? It is not here. And if you draw simple midline, so this is, let's say, maybe should I use different, because that chart layout has a lot of, yeah, I think this is good. So let's say this is simplified version, right? And we can draw a line like this, simple line. I'm just, it's just middle, it's just passing through middle. Don't try to find lows and all. It's just midline, approximate average line, mean value, so to speak, with this. So to just to connect my earlier points, this zone, I'm fine. I'm not fine with this, right? And of course, if it breaks below, we know it's bad. So I could explain this in within a minute, but I explained earlier with greater detail, otherwise whatever I just said, that's it. That is more or less the summary. This is midline, this is consolidation range. Price above this is good, price above this is warning, price above below this right, is bad. Simple. This is one day. Let's look at weekly. Now, when you look at weekly, I had mentioned this one, and this is very important. We extended this one and we get this one. So we get this area, as you could see, this is consolidation zone. So I think it's fair to expect. Now we are talking weekly, so you have to change your stand, okay? So when you change the time frame, you have to come out of that time frame. Whatever I said in 4 hours, you have to lock that for 4 hours. Okay. Whatever I said for one day, you have to lock that for one day. That means don't mix up. When I say lock means don't mix up. When you look at the 1 week like this one, you have to act like someone else. Okay. What I'm saying is because what you see on 4 hours one day and 1 week is going to be different. You have to have different approach. Your boundaries are going to be different. Okay. Your risk management is going to be different. Everything is different when you change the time frame. So when I talk about weekly, my focus would be the orange line, which is let's say around 48K. When if it comes down to this level, I'll give you more refined number, more accurate number. But for now, 48K, let's take that as a number. So you see, when you go higher, 56K is not the number important, which is the case for low time frame. When you look at it from a trend point of view, because now we are talking about this trend, and if it is above 48K, the trend is not broken, right? And as I said, I don't want to work on the lower unless it starts coming down below 56K. So I don't want to, but for now, approximately 48K. It's not a perfect number. I'll come up with more accurate number just in case if it breaks 56K. Right? But just for explanation that this is this is the confined area for low time frame, but for 1 week, this is the most important line. Okay, 48K. Then if this kind of level is broken, then only it's a point of concern. Okay, definitely then this is not a risk on a weekly, this becomes the warning. Okay, and then this becomes the risk, something like that. In fact, you can draw one more trend line like this, but I'll explain to you. I'm not adding it, otherwise you think this is the boundary. This is too deep. If it comes below this one, then it is certainty, near certainty, so to speak, that it is done. But for me, even around this 48K range is important. Anyway, this is just for, since we're discussing everything, it is important. So this chart is very simple and I like this one. Right. Now this consolidation, like we see, we would like to see higher level. So we are talking about breaking this level. And interestingly, it is not horizontal, like because of this little higher. It's a double top, so to speak, but little different. And that's why we see the angle at certain degree, not flat like 0 degree or horizontal, but because of that. And that's why I would say next reaction could be at 75K or 80K. But here on, I think this is going to be a little tricky because of the structure. 90K range is the next range where this leg should go up. 90K, 100K depends when it touches. So 90K, I think I'm sticking to 90K range for now. So we can say that this right now the current setup is indicating move, remember the probability point of view, the direction is up. Okay, there's no ambiguity. Even if we talk about scenario, right? Uh, the weightage is more on the upside. We discuss scenarios for understanding, but then we have to give the weightage. So my weightage is still, and as I said, uh, we cannot we cannot figure out each and every move. So if it adds delay, we have to adjust it, but doesn't change the destiny unless it breaks critical level. It doesn't change the destiny. So this is it. So let's look at another setup. I think this is too crowdy. I think that what we just saw is good. This is simpler version. I think I like it is. So this is so beautiful, as I mentioned earlier. When you look at it, especially when you look at closing price, look at that. And let me hide also. When you look at this, what on earth anyone would think that it is going down? If just look at objectively. Just look, forget about fancy stuff, you know, forget about events, forget about all the techniques. Just look at the chart like this weekly closing price. What is how come people are bearish? I mean, I have no answer, of course. But what from no forget about fundamental, forget about technical. You just look at like 8-year-old kid and ask me, ask ask even 8-year-old, he will or she will tell you that it is going up. I don't see anything. I don't see weakness. It's just the chaos, I think, is in the mind. I don't think chaos is in the market. The consolidation is part of the game. This was even larger, longer. If you look at this, is much longer. If you have faced this one, this is not big deal, right? And you never know. I believe longer the consolidation, I'll tell you, higher it can go. Trust me. Probability wise, statistically. So to me, this is good. Yeah, if it breaks below, that's not good. That's a different story. We are here, we are not here. So that's a big deal. So I don't know. So we were on alert when it was around 56K, right? Below six. But then that week ended with an amazing move, remember? So we had amazing move that day or that week, like this one. Even it touched 56K, it closed with a green candle, right? And that's why when you look at this closing chart, even this week had the lowest one. On a closing point of view, this was not lowest. In fact, this week was low, showing as lowest in terms of closing price. So this is interesting. So you can use this HLC area where the yellow line is representing closing, red is lower, and the green is high. So there are three charts in one here. Not so this is very good view, which I often use. Of course, the candle view has opening and closing, but in 24/7 market, it doesn't matter because the moment the weekly candle closes, for example, the opening is going to be from there. So it is very important for stock market, the candle one, because it closes on Friday, but not necessarily it opens at the closing price when market opens next week, Monday, you know, so it matters. But in crypto, it's seamless because it's 24/7. So that's why the candle opening and closing doesn't have much meaning. So I think there are only three, not the five values. Remember, the candle has five data points. high, closing, low, opening, and closing. So you don't need opening here, I think. What did I say? Did I make mistake? Yeah. So you have, yeah, previous high, low, closing, and opening. My bad. Four data points, not five. But I think here only three data points are good enough. Yeah. So that's why. So even if this has the low, in fact, closing point of view, this 6th May of week had the lower closing, right? Similar to this one. This one has this 22nd Jan had the lowest point, but not from a closing point of view. You see, this had lower. Similar to this one, March of 2023, 6th March, had the closing, but sorry, lower low. This is low, this is lower low, but the closing is higher close. So this is very important for you if you want to become TA. You know, if you are interested in TA, you should look for all this thing. So don't just focus on lows, focus on highs too. Sorry, my bad. Focus on closing price too. So that's why I often bring up the closing chart. And this is nice view where we have all three. Right. So even there was new low, the closing was higher. This and we are here. This is absolutely fantastic. This is fantastic. And as I mentioned last time, when you look at the closing, remember, this was the people always talk about highs, all-time high, all-time high. But they should think about all-time close also. All-time highs are important, I know. But all-time closes are important too. Okay. When you look at this price, right? Of course, this is not a closing price. This is the current price. But what you have to understand that there was new higher close, and this current price is actually on a higher closing zone. That changes the perspective. The last closing was 2021 was here around 65K, remember? And this is higher than that. So this is another technical reason why I would say what kind of weakness people are talking about. There's no weakness. This is in fact very strong move. In fact, I was surprised that when this is going to become, I mean, I'm not someone who wants to want price to go down. Don't think don't misunderstand me. What I mean is this move was crazy. I mean, this vertical move that you saw was without any major correction from here. And I was just thinking when this thing is going to stop. Because when any asset moves vertically, I'll tell you, then it ends up with higher longer consolidation. What I like is I don't like steep movement. I like movement at 45 degree, for an example. Because when the price move at 45 degree, what happens? You get steady progress every other day or every other week without major consolidation. I prefer that. You know, but when price goes up, remember, faster it moves, faster it retraces, and longer it consolidates. It always averages out eventually, right? From a wave point of view, of course, it changes, means it goes parabolic. But point is, faster it goes means that faster it's approaching to its high. So I like when it moves, at 45 degree around that angle, without getting into 60 degree or 70 degree, because when it reaches 70 degree, it is like approaching the top sooner. So it's like that. So what degree I'm talking about? I'm talking about this degree. This is 39, 40 degree, an example, right? And then look at this degree. This is a 62. So what happens is when the wave becomes parabolic, I hope you know it, parabolic. Let me show you from the preview. This is parabolic. You see, just look at my mouse pointer. This is parabolic. When it gets steeper and steeper and steeper, it approaches the peak sooner, I mean faster, like that. Of course, it could have gone up like this also. But that's a different subject. My point is, if it continues to go up at this angle, that it is like going, there is no immediate top. But the moment it starts making move like this, that means it is approaching the peak anytime soon. That's why I don't like, to be honest, that when it moves at this kind of more than 45 degree. You see my point? So don't get me wrong, but I prefer slow and longer bull run rather than fast and shorter one. Very different point of view maybe, but I like it. Long, the bull run should be for 4 or 5 years, not just 1 or 2 years, and let it go with 30, 40 degree angle. Oh, I mean, nothing wrong. Okay. So I think if it goes, so if we extrapolate the and if it breaks out on the upside, this angle is likely to go steeper even, let's say 65 plus, like this, and then eventually goes like what we saw in 2016, 2017 bull run, right? Parabolic, and somewhere we'll get the top. Make sense? I hope it makes sense. If it makes sense, then you can comment on it later on, so I would know. I think I covered a lot this day, and I think, as I said, let's look at monthly. I would like to see monthly without drawing. This is beautiful. Look at this one. This is tiny, and that's why we should look at monthly when the month ends. This drop is so tiny. Look, so the starting was this, right? 26K. Do you think on a monthly this is really like where in this move, if look at the segments each month by month, where do you think there was correction? I don't see any correction until this one. And when you look at this one, look at this, it reached up to this level, which is Feb month. I mean, this is the month, Feb months, right? This is March, sorry. So this is like Feb month, and it was almost there, the closing price. That's it. So what this particular move actually resetted the March gain, March month gain. So the April had resetted the March month. That's it. If I have to just simplify. Right. And back to this. So this is like, and now we got around 80-90% recovery. You see? So this is amazing February month gain, and then March month, right? And then this is a reset, and then again recovery 80-90%. So this is another perspective from monthly point of view. Firstly, that this drop was nothing. I have to say this is nothing. The drop was not for even more than 1 month, right? This was nothing, because it started on 26th. And that's what I was trying to say on weekly when we're looking at, I was waiting for correction. Not that I wanted correction, but if it continue to go up, then I don't like the long consolidation. But to my surprises, there are two surprises actually, not just one. The first one, it was relentless, restless, 26 to 72K without connection. That was out, mind boggling. Okay. And then this was only for 1 month. Again, I didn't wish it to go deeper and longer, but this is second, I would say, shock, positive shock though, that it didn't take that much time, and it is back to where almost there to it was in fact when it was 72K last week. So there was some retracement, we know that in this week. Otherwise it actually touched 72K 71K range, right? So we know that when we look at this HLC, you see it reached to this level, right? It reached to this level. So that's so amazing. So it's very important that how we track, how our eyesight, I mean, the method, we should train ourselves to see things in a way which could give us clarity, you know, remove all the noise, so that everyone should try to attain that kind of state where they can see through the fog, the hazy fog. And it is not difficult. I'm trying to bring that perspective, so it will help seeing through the noise and the foggy view, the obscured view. Not there, because there's so many, like in social media and around, so full of noise, full of noise. But when you look at this kind of setup, you see, I'm not doing any drawing here. I'm simply explaining with logical points, I would say, not even technical points, logical, common sense. And in my experience, actually, I'm not oversimplifying that after doing certain TA, actually you return back to common sense. So it's a different category of TA where, so I'm not generalizing. Don't think that I'm speaking in behalf of someone. This is my own experience, and I have all right to say, because this is my own experience, right? I'm not making up any or speaking on behalf of someone or community or as a TA. So when you start with a lot of tools, techniques. As you learn more and more, what you do is you start dropping them one after another, one after another. So first you start with someone else's methodology, and then you keep on adding indicators and all those things, methods, patterns, so on. Then you start dropping, because you are building your own understanding. So you, again, what you do is you replace those 10 items with your own 10 items. That's next level. So beginning, you use everything that is publicly available. Second stage, where you replace all of them with your own. And the third stage, where I say is the last stage. And last stage, when I say, I'm saying last stage is because when you struggle to simplify further, is where you reduce that 10 items into one or two, your own. It doesn't mean that you don't learn, but point is your approach boils down to one or two aspects. So your learning continues, but learning is for simplifying, not for adding stuff. What people make mistake that they keep adding stuff and add complexity. But what I realized that when you learn experience more and more, things get simpler and simpler and simpler. And it boils down to a stage where you don't feel that you're doing TA, in fact, which is very counterintuitive and contradictory, maybe, that TA is saying that you're not doing TA. as if like you are not a TA. But that's true. After a certain point in time, you're not using indicator even, and not using your own method. You're looking at the chart and just telling how the situation is. Probably that is the stage where when we can say that there is a satisfactory level where you don't need any technique. So you start with all the publicly available methods, then you replace with your own methods, and then you start destroying your own methods. Destroying means you put aside and then come up with something where you don't need anything, and that is then again the common sense, but the TA embedded somehow in subconscious, I would say. And that's how I see. Maybe I'm sounding more spiritual side, not but that's the realization, and that's what I felt. So I thought this is a small group I can share. Of course, I won't speak this kind of thing on Twitter or YouTube. People will say, but probably those who know me for long, they would understand what I mean. Anyway, so I think coming back to this monthly, this is so good. This is so good. Perfect. Okay, let's go back to our reference data, right? And see. Oh yeah, let's look at this candle view at least once. See, this is the red candle first after so many, and we are here. Awesome. So you see this one, this drop was well within this range, right? And now it is back to this. So this is, we can say, simply a delay. Now you will agree. I'm trying to explain the delay factor and why there is no risk from different point of view. We started with 4 hours, then I used 1 day, and then I used 1 week, and then used 1 month. And I try to do differently, if you have noticed, with different technique, of course, but the outcome is the same. And you have to lock different methods for that time frame, as I said, because you have to think differently when you are on different time frame. That also very important, because you cannot play on all time frame for your trade. Okay, you have to say this trade is for this time frame, this trade is for this time frame. I'm not saying you should only trade on 1 week or 1 day or 4 hours or 1 month. This is not what I mean. What I mean is, once you decide that my buy is for on 1 day, for example, that means your sell has to be on 1 day. If 1 day is the timeline that you have decided to start trading on, that's what I believe, because the structure is time frame specific. Okay, when you change the time frame, it changes the structure of the wave. That means it's going to change the lows and high. That means it's going to change your support and resistance also, tolerance and all. Because if you're leveraging at a very low time frame, then you cannot, of course, go higher, right? You know that. Same thing for even spot trading. So it's very important that you stick to time frame for both buy and sell. So in the same portfolio, you can do multiple. So one trade you have taken for 1 week, another trade you have taken even for the same coin for 1 day. It is possible, but you cannot do the sell and mix up, that's what I'm saying. You have to pair it up. Again, all these are best practices. No, these are not rules or not advice. So DXY is in trouble. Without saying this, monthly, look at that monthly. This is, when I say trouble, but it's not, it's weakening. So this candle is not good for DXY, we can see, right? And the opposite, we see the opposite, right? BTC went up. So, and this is again, though it is not a good sign, It is not broken. I would like it to break below 103, ideally 102, right? But 103, I will be more than happy. So I would like DXY to break below 103 and doesn't come back. That would be the moment, right? So let's enable the drawing and go weekly. So this is going down and I would like it to continue. So maybe the angle has changed a bit. So I don't think this is happening. Remember, these are dashed line. This is solid line. Solid line is where the probability is higher. The dashed line I drawn for visualization as an alternative scenario. The main scenario is the solid line. Just a clarification, just in case you're thinking why there are two paths on opposite direction, right? So I would like it to see this going down, coming down, and then go up and go down and then break down. That's a perfect scenario, right? Anything in between changes, we'll see. So I would say this is in line with what we wanted. And monthly is actually monthly, giving us clarity. And I love it. Monthly is giving clarity. Look at that. This is concerning for DXY, if not broken. I think further 103 below would look at that. So at this moment, this is more like April month for, remember, BTC, which I just talked about, where it has reached to this closing price. So we don't want next month it to go up like what BTC is doing right now, right? That will be bad for BTC. What we would like to see coming month, it continues to go down, break below 103, and that's where we get a boost for BTC. If I have to correlate both this DXY and BTC, hope it makes sense. So this is definitely very encouraging, but what we want a little more. So that's why we have to wait for it to come down below 103. When I say wait means before we confirm, not from a trading point of view, right? But for confirmation point of view. This is important um, data structure. So I mentioned this is closing price and the monthly closing price is still above this level because of the bounce we saw after drop. Last 2 3 days we saw some bounce. That's why. Yeah, this is an edge case. So, but this is still good because it's still here, but not, yeah. We don't want it here. Like BTC, remember we talked, we don't want lower. Similarly, we don't want DXY to be here. If it reaches here, then it's bad for BTC. That's why this is very good representation in my point of view. This is risk and pressure on BTC as long as it stays above, which makes sense. It's happening. And this drawing is actually very old. If you look at this we have for many months. And simple this drawing, I mean, this is helping us along the way. And that's the beauty of technical analysis. I think what else should, yeah, we look at the dominance. So the dominance on a monthly, this is flat. And as I said, there's some weakness, but unless and until it breaks below this yellow line, low line, right? We cannot say BTC dominance is over. But if it breaks below, then there is a good chance that it starts coming down. Now, this is important for broader altcoin rally. Okay, so good quality coins will go up with BTC, but not all. But when it comes down, will rally even some, ordinary coins. Okay, let's start with our altcoin list quickly. Now, there's not much in altcoin. Always say that because these are puppets, not in a bad way, but they don't go against BTC, you know that. So far. Okay, so this APT, as I said, this is the worst thing. I mean, but I think I explained that all these are child, this is the parent, everything was within this, and this is telling that it wants to go up. Simple. It and all this levels become the resistance. So this is going to be resistance, resistance, and so on. This is the last resistance and so on. But yeah, this is, I can say this is indicating this is over. Fair enough. VCH path, we have it. Probably this is likely to be steeper. Simple. BSV. Now there is latest update that Craig is going to appeal. So I'm going to keep it. I have no, see, I still believe that he was part of the team. And that is my personal belief. I don't want to, I still believe. And I want this case to be over and I'm going to keep it until that time. I hope you don't mind. So he's going to appeal. We don't know. And I'm totally with what judge has said. So I'm not someone who um keep a blind side, I would say, or ignore what is happening. But because I'm technologist, I know that there is scaling solution out there. They're doing with a Terra node. I cannot just ignore what they're doing. They're like doing millions of transactions per second with a smart contract. So, an architecture point of view, I find it very cool. So, I'm not just from TA point of view because my background is actually software technology. That's my, I work for 20 years in that field. So, I can tell that narrative is very different, but actual work is very different. That's why I have insight of that side of view also. And I believe that VSV has strong technology. So I would like to keep it. You may say this is, I would keep it until the case is over. I mean, the appeal is over. Doge is looking good. Look at that, right? Looking good, getting stronger. So it wants to go up. Very simple. Ethereum, this boost is all about ETF, we know it, right? So all of it broke the this trend line. And a trend line, as I always say, is just a visual representation. It's not a wall of China. It's not like a defense. The supports are important, and that's why this is important. The red line was important. Remember, good. So white line was more of so trend line in general for visualization. So the angle changes. So you have to change the angle. Now you can say it's a 28-degree angle on whatever in 20s, 30-degree. That's it. Doesn't change much. Right? If you draw from here, if someone say you are violating this, but the trend line is actually to get the angle. That's the whole purpose. The angle of the wave. When you look at this structure, you can say this is the angle at which this wave is actually progressing around 30-degree angle. So I explained this, I think last time that, yeah, I think I covered this part. So because what I do each week, I cover so many technical aspects. Sometimes I don't keep track of it. Sometimes I end up repeating also, but the attempt is to add more and more for you guys. So the trend line I use for measuring the angle of the wave. It's not about whether the trend is broken or not. Right. So sometimes people use it like Peter Schiff. Remember, Peter Schiff drawn a line and he declared that below 60K is done. BTC is going to go in like crash and all that. That is BS. There's a trend line. I don't know what made him draw that line and why he's screwing his reputation. He's so knowledgeable person. I really I used to admire him because of his knowledge in economics. But he is doing silly thing. I mean, sometimes people, ruin their career for no reason. I don't know. I mean, why he's doing, I don't know. Whether he's doing for fun, I don't know. But he's a crazy guy. He should stick to his area, man. Seriously, he's screwing up his career. I mean, you don't want to screw up your reputation in later age like his, right? Because his people will remember for his Bitcoin view. People will not remember for what all he has done well. Usually that's how it is. Anyways, no, I think this trend line has no meaning. It was just for visualization. Or this channel is important, and this level is important. It's going to break above. So if I zoom out, so you can say that this is it's going for 4K plus, right? And probably 6K. FET wants to go up. So I think it's trying to go up. It actually gained some momentum. It lost that value, but not as if it's crashing. And this is a crazy coin. I mean, crazy in a positive way. Amazing coin. And to my surprise, the market cap is just over 2 billion. While I was looking at it. So that's amazing. Even after so much of gain, in terms of percentage, you see it started from 0.05, let's say, and it is already 2.2, right? So it's 40x, correct? How much? Approximately. Yeah, 40x, approximately 42x. And despite of that, I think it's just over $2 billion market cap. It's amazing. Filecoin did bad in terms of retracement. Uh, if it would have stayed in this zone, then probably I would have. But as I said, I'm not considering this because as a premium one at this moment, unless until it we see him. Sorry, we see it doing good after it breaks out. So I'm going to judge this coin after it breaks above R2. I think once it breaks above R2, this coin is likely to be different than what we have been seeing so far. Okay, time will tell, but this is my TA talking. This is based on my TA. I won't judge this coin within this consolidation zone, but once it comes out of this, then I think this is going to be different, but we'll see. This is looking good. FTM started moving up last week, and then this week not much, but still it's good because it's maintaining this. Probably we can remove all this because this is from past. We achieved this, so we can clear up. We'll keep this box just for reference because it has come down, but later on we don't need that. So right now this is like doing very nicely, staying above this trend, right? 45-degree, pretty good. INJ little lower, it's okay. As I explained, not much, but I'll keep it for reference. So this has increased anyway. So it wants to go up, as you can see from a candle point of view. Look, this is the main drop. All the correction wants to go up without drawing. The KS is improving, as you can see. So this lower this becomes your support. Remember, the support is not one value. The closing price is important, so try to learn that uh, from this observation. Look at this. So this is very important. Closing price. So if the week closes below this, this becomes the important one. I hope this will help you. Right? Because otherwise, so many lows. If you go by lows, you go crazy. Hmm. What to say? Link is good. It in the second week after this amazing pump. So this one said, "Oh, forget about downside. I'm going up." And this is saying, "Of course, I'm going up." RNDR is a little surprising, but as I said earlier, it had early momentum compared to other coin. Other coins were in the correction when this was going up. So this guy is a little crazy. It is a step ahead, but this is here, not somewhere here. I remember most of the coins are somewhere here in their life cycle after this low, and this is sitting here. So this is not a concern. And this coin is so crazy that in a week it you might see a new high. This is like so crazy. I'm not concerned. Rune is making progress like every last 4 weeks. This is really good. I disabled the drawings. As you could see, we don't need drawings because we are trying to understand how, the progress and health. I mean, you don't need it, but I'll add it because you think this guy is cutting corners, but I'm not actually. Okay, there's a little longer consolidation. It's here, right? So it is staying above R8, which is good. This is so, this is all good. So if I zoom out, the next step is of course the all-time high, right? The next one. And what is important level? R7 is important level, which is 133. So far so good. TIA, TIA says I want to end this correction, right? So yeah, this it touched this R2, but then pushed back. It's okay. It's holding up. Pushed back, but holding up. So I would not say rejected. Yeah, pushed. When I say rejected means it makes new low, then say, go away, you know, make some new low like compared to last week. Then say, okay, that's rejection. Like this is rejection, but this is not rejection. This is like staying. Similarly, this is staying. This is positive. I would say that's it. Then I think I covered a lot. Today's session is very long, almost like hour and 45 minutes, or maybe close to that, or hour and a half, maybe. But I think I covered a lot. So I hope you will find useful. Thanks. Be in touch. These days people don't contact much. I don't know. The market is good. Weather is good. I would encourage everyone to, come on chatter, share something. That would be fun. I would really suggest that. But anyways, thanks for everything. Bye for now.